April 28th. How's everybody doing today? Let's jump into the risk disclaimer. We know there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos, whatever asset class, you know the risks. Social media, make sure it's Real Me, Mondays, Fridays, youtube.com/Chris Pulver for the Pulver Report, facebook.com/Real Chris Pulver. This stream runs on multiple platforms. Also on Instagram and Twitter with verified handles at Real Chris Pulver. All right, let's go into the charts. So we have the SPY opening bell 411. It was closed yesterday at 412, so we're slightly down. We had a big jump yesterday in the markets, and tech kind of led the way. We had, let's see if I think I had a screenshot of the heat map yesterday. A lot of green. Lots of green. Let me go to StockTwits. Yep. So here is what the heat map looked like yesterday. I'll have a screenshot here in just a moment. Right there. So some big gains yesterday, led by some of the biggest companies in the world. Tesla up 4.16%, Amazon post earnings 4.59, Google up 3.31, Meta huge jump on Meta 13.88, Apple up 2.8, Microsoft 3.15 continues to make some fresh highs. Paring back a little bit some of those gains. I just want you to note some of these important levels on the indices and the ETFs. Log into YouTube, say hi to everybody. All right, we're live. Chat's coming up here. Good morning, Chris. Good morning, Donna. Good morning, Linda. Good morning, Jacob. Good morning, David. Good morning, FK. Nice to see everybody. All right. So I want to write down a couple levels. So let's go to the Qs. 320 on the upside, big levels. And next week, by the way, we should know this, May 3rd. Wednesday, May 3rd, there will be a rate decision from the Fed. The probability still remains high that the Fed is going to raise rates by 25 basis points or 0.25%. And I think I have a link. Let's see, shareable YouTube link. Yes. Okay, I have a link for next week. FOMC session next week at 1:30 p.m. Eastern Time. There's a link if you'd like to join. I'll share this again next week. And yeah, so that'll be a 1:30 p.m. session. I'm going to do that with Nick Syack, and that's going to be fun. We'll just talk about FOMC, what's going to happen. I think there's big ramifications and consequences, positive and negative, for the rate decision. Here we go. Had an interesting webinar yesterday. It was basically a bull case and a bear case at the same time, because we're seeing conflicting ideas out there. And that's fine. I mean, gather a bunch of information, make the right, make your own educated decision. But bull case, okay? So Fed pause after May rate decision. We have seen that illustrated in so here's a bull case. If we go to the watch tool, the probability is still pretty high that we do raise rates. Let me go to refresh this website. Morning, Catherine. Morning, Ranch. How are you? Okay, so we're 85% probability that next week the Fed will raise rates by 25 basis points. We go to June, we're expecting a pause. Okay, we go to July, expecting a pause. Go to September, possibly a cut. So it's about 50-50 right now, probability-wise 40-40. It'll be interesting to see how this changes for September, but once we get into like Q3, Q4, the Fed is expected to start cutting rates. So let me just put a couple more issues in here. So Fed pause after May rate decision. So pause is what the market was waiting for all of last year, right? We had this crazy aggressive rate hike cycle from 0% to 4.5%, 4.75%. Pause is what the market was looking for. The Fed pivot, the Fed pause. So that does potentially create a bullish case. We also have, range trade. Range trade in the SPY, the QQQ, the DIA, and the IWM. So those are the ETFs that follow the S&P, the Nasdaq, the Dow Jones, and the Russell 2000. If those ranges are broken, we're looking for some breakouts. Maybe we have May into summer. We still have the debt ceiling to navigate from June to September. Hopefully it gets resolved earlier than later. Hopefully the debt ceiling is just raised if we raise it. So debt ceiling. Reeling, what? Debt ceiling raised if, I'll put if, weaker USD, stronger stocks, right? And I would even put world growth. So these are some big kind of macro factors that would justify, why we could see higher assets and stocks. Fed is pausing, okay? If the Fed is pausing and potentially cutting later, then we don't have quite the nasty stance on high interest rates, which won't choke out growth. The Fed's still going to want to see softer housing, softer shelter, softer labor markets. There's cuts. But again, I'm going to paint both pictures. It's not just bull case. I'm really not bullish. A lot of the trades we've taken in equities on demand the last couple of weeks have all been focused on directionally neutral. So if price goes up, price goes down, we make money. And then, of course, if we see a more obvious confirmation, then we start to get a little more aggressive in that direction to take advantage of it. Okay. So these are some elements to the bull case. And let's go why bear case. So again, it makes sense to me. And because of those range levels, if the market is just hankering for breakouts and we get them with confirmation, price action wise, then I'm going to follow it. Okay. Bear case. We have one of the most. We'll just put aggressive. I'll just simplify it. So aggressive rate hike cycle and tightening, and the market's still feeling the effects from that. We have job losses. That unemployment claims have been pretty steady, but we'll say job losses leak into manufacturing. Not just tech, right? Tech was really what took the job losses on the chin. Tech has made a nice little recovery this year, especially. The XLK, the tech sector follower, is crushing it this year. A lot of the companies have been up, 80, 90, 100% off the lows. Obviously, if you pick the lows, that's great. If you dollar cost average in, you're fighting the good fight. But job losses leak into manufacturing. Also, I'm trying to think. What else with the bear case? Let me check something really quickly. I had this written down, so I'm just going to get into it. Oh, yeah. Higher interest rates, right? Higher for longer interest rates. Even if we go to 5.5%, or 5.25%, and then we start cutting, okay, we cut by 25 basis points. We cut another 25 basis points. We still have a, 4+% interest rate on the Fed Treasury, or the risk-free rate, essentially. Are we going to have sticky inflation? Sticky inflation. Do central banks stick to 2% target or higher? Now that could be interpreted as a bull case. If all of a sudden the central bank says, "Look, we're going to be satisfied with like a 3% inflation target," great. I think that makes it not as impactful to see that we've already dropped from, like U.S. especially, dropped from 9.1 to 5. Do we drop down to 3%? And the Fed's like, okay, our job here is kind of done. Anyway, also tighter credit conditions, right? And then more bank insolvency. Now, this isn't a guarantee, and this will certainly depend on the speed and the timing of this. If we have more, middle-sized banks or mid-sized banks, regional banks, First Republic came into the news this week. If First Republic isn't really getting a backstop by the Fed, First Republic is one of many others that are going to face the same type of thing. Long bond durations out there that are 10 plus years that are worth maybe 70 to 80 cents on the dollar. If the bank needs solvency, then they're going to basically get rid of those bonds at a loss and just take it on the, take it in the balance sheet, which is not good. And that's exactly what happened to Silicon Valley to be cleared insolvent. And, again, concentration towards the top, a lot of flows into money markets and CDs and fixed income vehicles. What else do we have here? Oh yeah. And then the overall, and just because I have more bullet points on the bear side doesn't mean that's the higher probability. I mean, the bull case is still. I mean, look, the market isn't always rational, right? We should know that. So, and as the saying goes, the market can remain irrational longer than traders can remain solvent. So, I'm not looking to pick a side. I'm looking to confirm a side and then look to trade it. But a lot of the trades I'm looking at right now are directionally neutral, where I just want to make money on movement. And then we have a SPY or S&P PE ratio of 22, which is still pretty elevated. So that doesn't necessarily mean that we have a bottom in place. Last year when we had that huge drop in tech and all the indices were dropping, I think we got as low as 16, which was coming down more towards averages. Okay, so an elevated price to earnings ratio of 22 across the board on these major indices is still pretty high. Okay. Now, again, like I said, just because I only have 3 bullet points for the bull case and a bunch for the bear case doesn't mean that that is right. I really think that what we need to watch, and this is what we'll be doing in the trading rooms, is watch price. Next week we have two big news events for the U.S. We have the FOMC on Wednesday, and we have non-farm payroll on Friday. If we start to see that by Friday next week, if price is up here by Friday next week, or if price is down here by Friday next week, I'm going to look to follow that direction. Okay. Guess what? If price is in here by next week, even with the FOMC, even with non-farm payroll, I'm going to wait for this price to break out. All right. I mean, timing wise, this could be happening for May, and we have a big push coming in May. June is the debt ceiling, so we'll see how that gets handled. But we're going to follow price. Okay. So Qs, you can see those levels 320 and roughly 303 on the downside. The SPY, watching these levels here, I would say the high around 415 to 417, and I mean 400 would be fine. I mean 400 to 380 is a pretty good breakout. So if we have 415 on the upside and 400 on the downside, I'd say those are pretty good levels. And then the DIA, kind of a bigger range, but on the upside, if we break above 343 or let's just say 345, that looks pretty open, right? We break above 345 up here, open space, revisit the highs, or I would ignore this low for just a moment and then see if we break this low, because we're trading right in the middle right now. So a low of 330, a high of 345. I look for a breakout one way or the other, right? One way or the other on the DIA. And then the Russell, today in Equities on Demand, we're going to look at some trades on the Russell. I think this is one that I'd like to start positioning for. The Russell represents the small caps essentially. So if we start to get some interest here, which I like buying here, maybe doing some staggered credit spreads, and then I also would look at a long put that's long dated. So I might do like a 160 long put and put that out towards like December. And if we see that we're truly going into a recession Q3, Q4, and everything drops and small cap drops a ton, how do we have some follow through? If we have high to low, and then we have lower high to lower low, then 160 put dated out could be worth maybe $30. So if that's the case, I mean, intrinsic value wise, I mean, even if I take some losses on credit spreads, but I can get some profit here, I'd be pretty happy with that. But if that's essentially my protection, right? That would be if things go south, I want to make money on that. If things stay where they are and we can start positioning in here, then that support, we get back up to these range highs, or maybe we even have high to low. This is a dip. If I look further left on the chart, you're going to see that there's some pretty good past resistance right in here. Right? Past resistance right in here. Resistance becomes support. So I can see this, mid 160s to low 170s, offering some pretty good opportunity to be long. If we're right, lots of profit there. If we're wrong, the breakout's below 160. And if we are below 160, there is potentially a lot of room to the downside, which makes it pretty scary. So we are going to see, and this is stuff we're going to be navigating. So I like getting positioned for stuff like that to be somewhat neutral. The IWM technically is at a better place than others. I do have some straddles going on the Qs where we break above or break below. We're looking to make some money by the end of the year. Right here, in fact, it's out to January, 320 or above, we're making money, or 300 or below, we're making money. Right? And then once we have a more confirmed move, then we can start getting more aggressive here or more aggressive here, and then take some directional plays. All right, individual stocks, we can just check the big tech stocks. Meta just crushed it, 237, big gap to the upside. There's two spots here that are really interesting, right? Meta's making this huge recovery, filling this gap, but we're leaving gaps on the way. So we have a gap down here now. We have a gap just recently from this week. I suppose we could go up and start chewing into this big supply zone. But I wouldn't be surprised if we have some profit taking in a pullback. I mean, off these lows from what, October, November last year. I mean, Meta is up. I think it's up over 100% from the lows. With that gap and everything up 169%. That's crazy. So even just this recent run was up 120. So we've had these huge recoveries in some of these big tech stocks. So that's Meta. If we go to Apple, Apple also making a really nice charge off the lows. We're at 168. This is a really strong correlation with the S&P and the Qs. Apple, we go to Amazon. Amazon got up to 110 yesterday. We're trading at 104. So we had this big push to the upside yesterday, and then Amazon coming back down very quickly, but still, holding off the lows. Google clinging here to some nice levels. We put in some credit spreads, greater than 110, less than 100, and let's see. Is that it? Netflix. That was our other. Netflix hanging here at 325. So I was looking at some trades, 340 and 320. Today we're going to talk about Netflix and IP and IWM. Let me write that one down. I want to look at some IWM for today's. Oh man, I played basketball this morning and I jammed something like hand, finger. It's killing me. I can barely write. IWM. Chart alarm, Comcast 4102 highs. That's good. That's what we have a bunch of credit spreads on. Okie dokie. So CMCSA. Oops. CMCSA. Comcast up to 40.99. We have a bunch of credit spreads on this one. I already got the notes up. Never mind. Right here. We have some credit spreads. So what else? Right here. There we go. June, July, October, January, the 40 by 37.50. All those are showing some good profit. Again, there's still time in each one, but if we hold this level at 41 plus and start to get a run, we've got some pretty good income coming in on Comcast. That would be, $3, $4.50, about $6 of credit coming on CMCSA if this gets a nice little run for the end of the year. So good stuff. Okay, so we understand what we're looking at macro-wise. I mean, bull case, bear case makes sense, and evidence points both ways. Price action is ultimately going to be what we follow. I think we have some good levels to watch on the SPY, good levels to watch on the DIA, levels to watch on the Qs, levels to watch on the IWM. The Qs have outperformed. If we go to sector performance overall, Hershey up. I saw that Hershey's up the new highs. Here is, let me go to, tools, sector tracker. I think actually communications, because of some of those big FANG stocks, it's up higher year to date. Yep. Communication services up 23.75 year to date. Technology sector is up almost 20%. If you go to communication services, take a look at the holdings. Guess what's leading the way? Look at that. 25%, nearly 25% of that index weight or that sector weight is Meta. So it's kind of unfair, right? I mean, it's like this thing is crushing it on the coattails of Meta, being up 169% off the lows. But there's some pretty big companies there. Google at 12.77, Alphabet, two Google companies essentially up. That's 23% of the sector, and 25% of Meta. It's like that's really biased towards like two companies, Google and Meta. But it is what it is. That's how they have it. Okay, but that's year to date. I mean, if we look at the last 5 years, it's no contest that technology is outperforming, but also, we've been in a crazy bull market for the last, decade plus. So I'm just watching. I think year to date is interesting. Technology's had this great recovery this year. Communication services on the coattails of Google and Meta have performed well. Energy still sideways. Oil still pulling back. Oil's in the mid 70s right now. We're trading at 74.69. If this level holds, there's some good bullish potential. Otherwise, this was just a fake out of the 200 EMA. Would come back to 65, and we just see support. And we talked about that this week in the trading rooms like this. So if this coils more, that's fine. But I mean, oil's gonna likely pop just based on technical squeezing. Plus, we have OPEC looking to cut production and kind of keep price elevated. Gold and silver. Gold's still pretty choppy. Dollar index still hanging off the lows. This is my make or break on the dollar. We'll know more about this next week, right? You join me on that Wednesday FOMC session. We have non-farm payroll on Friday. Are we breaking higher or lower on the dollar? We'll find out. Silver. I like silver better than gold as far as the buying opportunity. There's more upside potential, but a little pause right here. Bitcoin has done okay, but we're not breaking fresh highs. We're not breaking lows. So we're still kind of stuck around this 30K resistance. We're going to see if it holds, and resistance maybe pushes price back down to settle in at 20K. This is another big factor that goes in with my bull case. If the pause by the Fed equals stock market rallying equals weaker dollar, Bitcoin will likely be a beneficiary of that as well. We could have gold rally, oil rally, silver rally, Bitcoin rally, markets rally, like stock markets rally. We could have risk on currencies rally. We really could have a lot of movement, a lot of profit potential on dollar weakness. Overnight was the Bank of Japan. They had a rate decision. They didn't do anything. They're just going to keep rates the same. I believe that nothing changed. If I go to Forex Factory, I believe they kept it at negative 0.1%. There's your outlook report. The rate decision would have been last night. Not here. Tuesday, Thursday. Where is it? Press conference, BOJ. Oh, there it is. So the policy stayed the same. And there's like a 1 to 2 year window of maybe they adjust or look at policy rate decisions, but they're not doing anything right now. And overnight, that JPY just got super weak. So good volatility on the yen crosses through and post economic outlook report and rate decision. So we're still seeing weakness in the JPY, which again makes it interesting with levels on the Swiss yen, right? That's sitting here at 152. Sitting here with overbought conditions and divergence. So does this daily candle is this a true sustainable move, or is this a fake out? And honestly, there's a pretty easy trade here. If you put a stop sell below this Swiss yen, I would like to take that with this being the high. If price is going to fall back down and take out this low, we're probably putting a top in place on the Swiss yen. Post rate decision, we could have like a 1 day move, and this puts in a top, and then the yen starts to get much stronger. Again, I'm not fighting this. I'm not calling the top here. I'm just looking at a stop sell below 149 would make sense to me technically. Euro yen, same thing. A stop sell below 146.25, because if we're coming up here and closing, we could close above, right? We can close above, but if we get below here, that'd be my sell spot. If we break, pause, you can certainly look at a bull flag to break and go as well. Tight stop loss and see if the JPY just stays weaker. So what we've talked about all year is just staying with alignments on the JPY. Simple as that. Okay, dollar yen still has a chance to pull back into that 140 to 141 level. We looked at this from a technical standpoint. It's a Gartley symmetry pattern. So X, A, B, C, D. If that's our Gartley pattern, we're looking to sell it in here and then take it back down towards the lows of this 18127 extension. I think 120 is very possible. Again, maybe this is the story this year is in order to save the stock market, the dollar has to get softer, right? It's very possible that the dollar takes it and is kind of the sacrificed asset while everything else can outperform. China might be this big story as well. There's a lot of large hedge funds out there that are looking non-U.S. for growth this year, and maybe it's in China, maybe it's just non-U.S. period. So anyway, dollar weakness could be a big story, and I think that kind of unleashes a lot of profit potential elsewhere. Right? The dollar last year was super strong, super. The stock market fell and everything got really difficult. So to ease up that pressure, the dollar sacrificed and everything else shows some growth potential. Okay, Tesla. Yeah, Tesla was up yesterday, but still kind of range bound, right? 159. Tesla's experiencing a lot of it's just like their price points, I think, are what investors are nervous about. They continue to cut prices on their cars. They're looking for more quantity. I thought that the big news on the gigafactories and the battery packs and all the the energy related things that weren't car related would start to get investors a little bit more excited and stoked about Tesla, but not yet. So I mean, look, I still like Tesla longer term. If Tesla came down to $100, I would certainly do lots of trading there. Kind of interested in some stabs here, but not really. I did a straddle in here where if it was above 190, I made money. If it was below 175, made money. We made money on the downside. So that's good, right? Just for historical reference, so we see high 158 on 12. Yeah, okay, so that goes back almost what 40 years? 158.95. Yep. So like I said, that's why I'm not fighting. I'm not fighting the yen. I didn't want to fight the yen. I fought it last year. It was exhausting. It was troublesome. It was painful. It was annoying. It was stupid. It was avoidable, but I didn't. So this year is more stick to the alignments, trade short-term alignments, and that's kept us out of trouble and kept us honest with what we're seeing on the charts. But the JPY is offering good volatility, and we're going to see how those recent pushes off the BOJ move overnight last into next week. Again, with this seasonality, I mean, going into the end of April, this is the end of the month right now as far as trading. Coming to May next week with FOMC and non-farm, a lot of what we see directionally tends to stick around through May. I'd be a little surprised to see the JPY moves today all of a sudden be a top, and then next week they start to drop. It's possible, but I think this breakout might have some follow through, might have some legs through the month of May. So stick with those short-term alignments. Okay. All right. We do me a favor. We have about 40, 50 people watching. I know this recording gets posted as well. If you do me a favor and hit the thumbs up button for me, let's get all the watches come in, hit the thumbs up button for me, and support the channel, get that algorithm saturated with some likes. Thank you, thank you. Any other charts you want to take a look at today? Bull and bear case, like I said, that's important to watch for next week. I will be with Nick Syak on Wednesday for FOMC, a little joint thing. We're using StreamYard, I think is going to be our StreamYard is going to be our broadcast platform, but it's a free link. So I'll share that again on Monday. I'll share that on Twitter and stuff like that as well. So we should have some good following, and it'll be a fun episode with Nick. Yep. Thanks, Donna. Okay. So we'll watch the indices. Equities on demand. We'll start here in just a few minutes. International paper, IP is the ticker. Netflix, IWM. I want to take a look at some trade opportunities there. We put in our trades on NVIDIA this week, Microsoft, the Qs, looking at some directionally neutral straddles. And I think that's it for right now. Yeah, all good. NQ, you're looking at some NASDAQ futures. 13,206. This is a potential breakout spot, right? So watching this high, watching this low. I think next week a lot of this is we'll find a catalyst. If the dollar's the catalyst, if it's the FOMC non-farm combo next week by Friday, fine. But I'm just following price action. I think the good thing is we have structure that we can watch, right? It's not just like out of nowhere all of a sudden it's like, oh, it's bullish, oh, it's bearish. Well, let's chase it. I mean, it's pretty coiled. We've had this early melt up in January, February this year. Now the market's kind of stalling and evaluating. Is it a bull case? Is it a bear case? And I think I want to be positioned for either way. I think right now I'm positioned pretty neutral. I'll make money on the upside or the downside, taking some stabs at it. But for the overall portfolio and how I want to get more aggressive this year, I'm going to look to follow along with price action confirmation. Okay. All right. All right, everybody, let you go for today. Let's sync back up on Monday, 9:30 a.m. for opening bell. And have a great Friday. Have a great weekend. Today in class, I will see Equities on Demand students here in the next couple minutes. Master Flex at 1 o'clock and Equalizer Pro at 2:30. Also, I want to check on how those robots are doing really quickly before I go. Equalizer buy is up 281 pips this week. Equalizer sell. See how those are deployed. Equalizer, come on, bookmarks. Buy only, no. All right, my browser's being a little slow. Okay, sell only is up. Nope, actually sell only is down this week. So buy only's up, sell only's down. And my Perfect Storm Pro, 309 pips. Perfect Storm Original. I'm just checking on one of my other monitors here, so just bear with me. This week is up 241 pips. And my Pockets Pattern Pro. I have a feeling on my Equalizer buy, that was probably stopped out on a lot of yen crosses overnight. There's enough volatility and enough pushes that could have gone like single day through a lot of those resistance levels, and that's where I would have taken a loss on the buy side this week, or I'm sorry, the sell side this week. And then my last one is Pockets Pattern Pro, that reversion strategy, trying to find those pockets and supply and demand levels. And that one is up 70 pips this week. Okay, so Perfect Storm Pro, Pockets Pattern Pro, fine. Sell side got hit pretty hard. Buy side is a profit. So overall, net making some some auto trading profits this week. Never a complaint. We had some good runs. Euro Aussie, Pound New Zealand, Euro New Zealand doing pretty well. Trading some dollar weakness. Hopefully we see some follow through on that. If we get it, we're positioned for Euro dollar strength, Pound dollar strength, New Zealand dollar strength, Aussie dollar. We got stopped out. We didn't get back in yet because it's still in range bound trades in our charts. But big catalyst coming next week on that combo Wednesday, Friday. Okay, good stuff. Thanks, Donna. Thanks, Denise. Thanks, David. Tom, thanks. And thanks for being here, everybody. Happy Friday. And let's switch gears, equities on demand. I'll see you in the trading room. Thanks, everybody. See you Monday. Bye.